Current events in the foreign exchange market with Gonzalo Cañete, Chief Strategist at ATFX Connect. How are you, Gonzalo?
How are you, Abba? Very good afternoon. How are you?
We promised that this Wednesday we were going to bring a special on oil, since there are a lot of things to comment on. There are many currencies also linked to oil. It has been a while since we only touched on it a little bit. And, well, it is interesting to know that we are in several conflicts. And if something happens with oil, it is going to be a bit like a tsunami for the central banks. Explain this first, and then we will go to oil prices, at what price oil is profitable or at what price it is no longer profitable. And we will see those little things. But, well, the first thing is that there are many looks towards the guys, towards China and other places that are not where we have real armed conflicts right now, geopolitics, and that oil can be the first protagonist. Tell us.
Well, yes, that's right. There are three factors that we have to consider with oil and that we have repeated in several reports. But in this special, we are going to comment a little bit on where these issues could go based on oil and what we are seeing. First, we have seen oil for more than a month. We are talking about practically the last 2 months. It has made some incredible swings, and there has been a weakening that surprised the world. That is to say, every time we have heard the possibility that the conflict between Israel and Gaza would escalate, it accelerated the price of crude oil, but not too much, and it fell again to minimum levels. We have even seen scenarios where there were attacks. For example, the attack that the United States suffered on the border between Jordan and Syria did not seem to provoke any kind of reaction to the price of crude oil. So there are a number of factors here that tell us that for some reason the price of crude oil remains suspiciously calm. The scenarios that could be foreseen, and that more than one analyst, especially analysts specializing in energy, Middle East, had told us were two possibilities. One, the possibility that Iran would enter fully into the conflict and therefore make good on one of the threats it made, which is directly towards crude oil. Iran threatened, not now, but during the Syrian conflict with the United States and Syria and Russia's intervention. At that time, it threatened that if for some reason there was an occupation or an invasion of Syria, as there was of Iraq, Iran would consider it an attack against its own territory and therefore could consider measures such as closing the Strait of Hormuz. At that time, and we are talking about the time of approximately 2011, one of the speculations of 2011, 2012, 2013 was that if this conflict in Syria ended up splashing Iran, and if Iran closed the Strait of Hormuz, crude oil could shoot up to $150 or more due to the impossibility of exporting all the oil routes it had, mainly from the Arab Emirates and Saudi Arabia through those waters to Europe and the rest of the world. So this factor had an impact. Now that we see that there is not only the Iranian threat on oil, but there is also the Yemeni threat on oil, and that is that Yemen will interrupt the traffic through the Suez Canal. Any traffic that, as the Yemenis have repeated more than once, would only affect Israel. We are not doing a commercial blockade to the world. We are only doing it to Israel, and any ship that passes through here that does not have Israel as its destination can pass through without problems. But of course, trust how accurate that is when we saw ships burning for hours 2 weekends ago. So we can see that this threat looks pretty serious, and that, as Biden said, you're going to continue to make strikes against Houthi positions. Yes. Are they doing any good? No. I mean, that's pretty much what Biden said directly. Now, two factors that I want to throw out in this special are, one, the response, or rather the lack of response of the price of crude oil to which it responds. I have two theories that we can shuffle around. One, the weakness of global demand, because we are seeing, for example, that the data that India published on its energy consumption in 2023 was lower than in 2022. Two, the slowdown in China, which may also influence this decrease in global demand. But the industry in Europe, which is Germany, has also announced that it was reducing its imports and exports. So it was probably weighed down by a drop in global demand in its trade balance. Therefore, we see that even Germany is also suffering, or seems to be suffering, from a reduction in global demand. If that is true and it is latent there, perhaps this would be one answer why crude oil is not responding. There is another answer, but this one is more speculative. Why is crude oil not taking off? Well, because of what Alberto Iturralde said, for example, is that it is an election year in the US. But there is also the second option. They have liquidated their crude oil reserves. The United States has liquidated 30 years of crude oil reserves. During the year 2022, with all the inflation going up, the United States, in order to prevent that inflation from killing the economy, what they did was they started liquidating crude oil reserves and kept crude oil relatively cheap. Despite the fact that OPEC wanted to raise the price, the United States tried to negotiate with them. It was the absurd reception given to Joe Biden in Saudi Arabia, who commented a lot on the scenes of how he was received, while the president of China was received with full honors.
Well, this special oil, and you know that the currency most linked to oil is, for example, the Canadian dollar. So in a scenario in which you want to get out of this range, and oil bounces would be to trade short in pairs against the Canadian dollar, such as CAD dollar, well, CAD dollar precisely. If the dollar does not go up, CAD dollar precisely, if the dollar rises, is not a good example, but it would be a little bit like that. Buys in the pairs that start with CAD and shorts in the pairs against the CAD. There are pure correlations in this comedole, which they call it commodity dollar, which are currencies linked to commodities, in this case, Canadian dollar with oil. We are going to leave it here. It has flown by, and we have caught a lot of interesting pearls, and we will have this threat very much on the horizon. There is always oil, and of course with the conflicts that we have armed. Thank you very much, Gonzalo.
To you, Alba, thank you very much for inviting me. A hug.
See you now. Bye-bye.